Hey, so I got to talk about QBTS this morning because it's the first time I've ever traded this name. QBTS had this big gap up and was showing a lot of strength. We're getting a little bit of a pullback in the indexes. And my thought was, okay, well, I was interested in Tesla because it had the push on 350 that it was doing. And I was interested in anything quantum. So I pulled up on one of my screens, I had QBTS, RGTI, IONQ, QQQ, Tesla, Bitcoin, and UNH. And then I also have NVIDIA there too, but I wasn't really watching NVIDIA. I just kind of watched NVIDIA to see what's happening in semis in general, right? Because that's going to affect QQQ. And they were being kind of weak. Tesla made an immediate push for 350, and so I was in that trade. Um, Actually lost a little bit on Tesla when it had the big pull in. I was holding on for more. Anyway, I digress. QBTS. Never traded this name before, and I was very impressed with it. Um, but I did make a couple of mistakes with it, and so wanted to talk through that. I'm currently in it again. Um, so here's the 1 minute chart on QBTS. So here's what it was doing, and then we're in blue sky above yesterday's high. We gap up into blue sky, and Dan had talked about this in the live stream, which I every single time I listen to Dan, I learn something. It's crazy, and I'm sure he said this stuff to me before, and I'm just finally registering it. I think that's part of being a trader. Sometimes you just gotta be ready to register something and acknowledge, oh yeah, I get it now. So anyway, looking at QBTS, let me look at it on the 5 actually. I'm going to expand this. So yesterday we basically had, it's kind of a tightening range, but it's also pushing up towards yesterday's high again and again and again, and then drifting towards it in the after hours, and then boom, pre-market, we're up and away. This is basically a cup and handle pattern. And Dan was saying that the cup and handle pattern is much more effective when there's nothing to the left that's going to prevent this handle from following through. And because this was reaching highs, that's exactly the setup you want. And so you can even see in prior days, here's a bit of one. It could have done the break, but it did have this resistance right here. Whereas yesterday, it didn't have any resistance to the left. So that's sort of the big takeaway, which I think is awesome. And then on the open, let me just review really quickly what I did. Okay, so here's the 1 minute chart on QBTS. On the open, there was a bit of wobbly balance, and then it did this pull in. And I was watching for, let me get rid of this. I was watching for 5 minute oversold. Where'd you go? Bring this back. Okay. So I was watching for 5 minute oversold, and you can see we didn't get anywhere near it. But I was thinking in my mind, okay, one of two things is going to happen. We're going to flush down and stair step into 5 minute oversold, and then I can play a stair step break to the upside, or the bulls are going to be so excited they're going to front run it. And you can see that this balance here from pre-market is where it basically stopped. And that was, I wasn't confident in this spot, but I thought, well, it's as good a place as any to take a shot. So when it broke the prior candle high right here, I got long, and I put my stop below prior candle, so somewhere there-ish. I don't know why it's being so sluggish. Hang on a second. Okay, so this was essentially the trade. I entered in this candle. It did wobble around quite a bit, but I entered on that break. As soon as I had enough to get risk-free, so somewhere right around here somewhere, I sold half. And then I was looking for the pre-market high, this orange line here. So when we hit the pre-market high, I sold another half. And then I call that, so this is my entry. Then I get the risk-free sell is what I call my insurance. Then I get the next trade, which is my target, where I think it's going to get to right there. So basically it's a 2-to-1 at that point. And I've already taken half and then half again. And so now I'm down to my runner. And I had kept my stop. Had I kept my stop at the bottom of day, it would not have broken. It would have worked. But I stupidly, again, I'll talk about what I did, but I raised my stop to here below this higher low. So we had the rejection off of there. We set this higher low and then kept going. And at that point, what I was thinking was, oh, cool. We're just going to do an MA rider. This thing's just going to go. And so I'm going to do the thing where I raise my stop up under each consecutive higher low that tests that 1 minute EMA 12. And we're going to run it up, run it up, run it up, run it up. And then once that stair step breaks, then I'll be out of that trade and maybe look for a higher low. Because the 1 minute stair step holding would probably be a 5 minute, the 1 minute moving average rider holding would be a 5 minute stair step up. And when the 5 minute stair step breaks, you're looking for 5 minute consolidation. So that'll be a significant pull in. So this is like all stuff I'm anticipating and playing, which is, I was being a little bit too fast and loose on the fly here because technically what I should have done, because I was down to a runner here, is I should have just kept my stop there and been like, wipe the hands, walk away, don't even look at the trade anymore and see where we close. I'm either going to stop out or we're going to close at high of day is what I should have been doing, but I didn't. I stopped out there and it was a good win, right? Like I did well on that trade, but I could, it wasn't the best trade I've ever done by any stretch. And let's take this off. And so what I wanted to talk about was a couple of things. I was super impressed with the liquidity because it's like always with the spread is always like zero. It's like 1 penny. It's always 1 penny. So that's really good. Like it's very liquid, which I was actually not expecting at all. A lot of the time, these lower price stocks tend to have a pretty wide spread. So I was really excited about that because every time I did hit a little stop, it was filled right there. I didn't have like crazy market fills that made me lose. So that's impressive. I really like it. Okay, last but not least, what did I do wrong? So first thing I did wrong was not keeping my stop there. Second thing I did wrong was after it hit this, I basically walked away from the trade. At the time, Qs are consolidating at the lows, SPY is consolidating at the lows. Tesla had rejected from the highs above 350, and so in my mind, I'm like, look at this Tesla chart on the 1 minute. I was riding this. I got in right off the open somewhere here with my stop low, and I rode this up, and I was holding on for more, and then when it came all the way back in, I was like, I couldn't believe it stopped me out because I had such a good entry that I was just like, well, I'm just going to put my stop there and I'm not even going to take any off. I'm just going to let it go because I think it's really going to go on this break of 350. And of course, it completely rejected and stopped me out for a small loss. Ho-hum, I digress. But I'm looking at this and I'm like, oh, well, okay, if Tesla's failing the breakout, that probably means that it's because it doesn't have the market support and maybe we're actually going to get a significant pull in today. But, look what ended up happening. QQQ is just chopping sideways, which, again, sideways is actually, in my mind, a healthy consolidation. So anyway, at the time, I was like, the trade's over, is what I thought in my mind. I'm like, I just forgot that I should have kept my stop here and that as long as that holds, you're still bullish. We're still gapping up. It's still super strong. Just because it didn't keep going on the 1 minute time frame doesn't mean the trade's over. And so I walked away. What I should have been doing was, assuming that I did take that stop, which I probably shouldn't have, I should have just let this runner run. Then I should have been watching for, does it break the low of day, right? When it comes in, does it hold that? Does it come in lower and try to get closer to yesterday high of day down here? Or does it actually hold this low? Because if it holds that low, that's a really good trade to be in. And so here we get on the 1 minute time frame, we get a low, lower high, lower low, lower high, higher low. Boom. So this was my next opportunity here. I should have been doing this. And if I wanted to be super cautious, I could have been risking down to here. And look what happened. Boom. Instead, I was looking at other names. I was trying other things. I was trying to get into Tesla. I was fishing Tesla against yesterday high of day because I thought, I'll just jump over to that really quick. Because I thought, here's yesterday high of day, and look, we came down and we tested it. And I actually got into the trade here. I got risk-free. I had my stop below there, and then it came in, it almost broke down, and then it started to go up again. And as soon as it started to go up again, I was like, what am I doing? Like this full retracement of the move, most likely went was a lower high. So when it went up here, I got out, which in hindsight, I'm like, why not just hold on to that? Anyway, a bunch of mistakes I made today. But that's what I was focused on. I wasn't focused on this, and look at this thing go. So when it did break to new highs, then I'm like, oh, I have to find another way into this thing. And I know that this peak from here would be a good place for it to catch. And I was looking on the 5 minute time frame. Where's the 5 minute EMA 12? It was coming up to meet that level. And I was like, ooh, this is great. So I should try to do this. So 1 minute time frame, I was buying these extensions into that level. I bought on this breakdown here and I bought on this breakdown here. So my average is somewhere in there. And I've sold half on this move up and now I'm holding on to the rest for a continued move to the upside. So I'm basically in this trade again from somewhere right about, here, you can see that. I use this one tool to measure where to get risk-free. It's called the GAN box, and I have it set up to do this, where I'm like, okay, this is my entry. Here's where my stop's going to go, right? So let me redraw this GAN box. Oops. I use this all the time to be like, okay, here's where my stop's going to be. Here's where my entry was. And then I have it extend out 2 and 3. So this is my risk. Here's one of my risk and another of my risk. So if it gets to this 2, I can get risk-free if I sell half. If it gets to this 3, I can get risk-free if I sell a third. So here I sell a third up here. I'm risk-free on the balance down there. Anyway, something to think about. So yeah, I'm in this trade. I'm hoping it goes higher. Really impressed with the stock.